Late night Cappy. Actually, I'm not going to do it. It's not that late. It's before 10. Everybody else is awake, so I can do it. Although, oddly enough, several of you people have said you really like the late night Cappy voice. I didn't know that I could. I always thought it was more annoying in NPR. Maybe it's more melatonin, late night jazz station, late night Cappy. Yet another podcast that I'll add to the repertoire. Captain, can you, in plain English, tell me why the hell the stock market keeps going up, even though we are in a bad recession? Thanks, Cat. And so I reached out to him or her, I'm not sure which. And I said, are you new? And they are. And a friend put him on, and he read Bachelor Pad Economics, which, by the way, if you're searching economics, I guess we might as well make this. If you're interested in economics, get this book, Bachelor Pad Economics. It's only for men. No, women can read it too, but I don't think girls would like it. So anyway, that you can read. But all right, so here's the deal. I'm sure this is a very common problem because until recently, I think today or yesterday, the stock market corrected a little. It's off 2%. Oh my God, the market's crashing. It's like, no, it's not. I mean, it could go down even more. So here's what's happened. Starting with the disease, because I'd like this education to get out there. We can't use certain words because we're all about advancing ideas on YouTube. Starting with the disease, everyone panicked and everyone sold, and then everyone went right back in and bought it up. And now, since that time, the market's gained 20, 25%. I'd have to look at it again. And you say, this doesn't make any sense. Especially in light that GDP contracted at an annualized rate. To give you more education, when you see GDP growth figures, that is an annualized rate. The latest one came out at a 33% drop, which is historic. That's historic for one quarter. That means if it kept going at that rate, we lose a third of our GDP. But that's a horrible. That's the worst I've ever seen on record. The worst. Unemployment was up to 14%, I think it was. And you have to forgive me, but I don't pay attention to economics anymore because no one ever listened to me about it. So I'm not paid to, but I can still give you the basics. And logically and traditionally in the past, you say, this is horrible. The economy is collapsing. Unemployment is high. People are losing their jobs. There's less income. Why does the stock market keep going up? And what you have to realize is there's been this thing called decoupling, or an untethering. In the past, the value of a stock, or all the stocks that make up the stock market, was driven by what the future expectations of that firm's profitability would be. Keep in mind, it can't be past, because what's happened in the past, the company made its money, it's paid out its dividends, so now you own this share of stock, and the only thing that gives it value is all the future profits that company will generate. So this is why stock prices and bond prices and any other asset prices are constantly changing, because as more and more information hits the market and there's newer information, that changes what people are expecting this company's profits to be. Now, there's a whole bunch of going back. What was it? Frank and Dodd? No, that was a act that was passed. Securities analysis by Graham and Dodd. That's what it was. These guys came up with the literal formula, the literal mathematical way that you would derive a value of a stock. And you have to make some assumptions about what the profits would be growing, and technically dividends. Okay, is there inflation, all that, and how could you forecast that? And then you would discount it based on risk. It's called the CAPM model. It's very boring. It's completely obsolete now. But that's logically what it was. So it was, what do we think the future profits of this firm is going to be? And then a lot of analysis and financial minds, financial geniuses, I would say, did the mathematics to say, okay, here's how we calculate that and infer a price today. And as more information hit the market, the price would change accordingly as these models, or the math would, you put in different data, the models, and it would indicate different prices. People would buy and sell, and that's how the stock market worked. That was logical. If the profits went up, or if sales went up, or they got a new contract, but the sales hadn't been realized yet, but they got you're a road building company, and you'd say, oh, we got the contract for the government roads. Well, we don't know how much profit's going to be, but that's good news. Let's buy up on that. So that's traditionally what drove stock prices. Good news drove it up, bad news drove it down, and not necessarily related to the firm, but as you've indicated, the economy. If the economy is going into recession, what happens? So this is the most dramatic difference we've seen this quickly between what's happened in the economy and the stock market doing the complete opposite that it should be doing. The problem is, again, back to that untethering, because it is not just the profits and the overall economic environment that drives the price of a stock. There's also the demand for stock. And when you think about demand, you have to think like not just, well, okay, good news drives demand. Yes, but there's other things that also drives demand, namely, how much money did we print off? And remember, it's not just how much money cash you have, but you can borrow money and go and buy shares of stock. So it's not just how much money do we print off, but how much money can we borrow? And so now what you have is, I don't know if you've known this, and maybe I'll throw this into the description. I'll add this later. But if you look at the monetary base, everyone can do this right now. Type in Google and search Fred monetary base, or M1 money supply, M2 money supply, whatever. And you'll see that under Obama, he just shy of quadrupled the money supply during the housing crisis. You all wondered why housing recovered so quickly. Well, there you go. And the stock market. But wow, Barack Obama quadrupled the money supply and the stock market quadrupled. What financial genius could figure and suss that out, what happened there? And then with the disease, Trump basically added another 50% on that 5 or 4-fold increase. So I think it's $2 trillion or something like that. And we've kept interest rates very, very low, artificially low. I'm not going to go into all the things that the central bank and the Federal Reserve, they're the same thing that they do to keep low. But debt, money is cheap to borrow, and we've printed a lot more off of it. Now, in the case of, let's take the financial crisis, the housing crisis, the federal government printed off a bunch of money. We gave it to the banks, lent it technically. And the banks get that money. And under Obama, it wasn't just banks. That the TARP originally started with Bush, continued on with Obama, but Obama also printed off a lot more money, basically to buy votes, and a lot of it just went to social press. So it doesn't matter. It comes fresh off the print presses from the U.S. Treasury Department. And they print that money. Federal Reserve. That money is then given to whoever it is. The banks, the welfare queens, the welfare kings, government contractors, the military, whatever. So, and it doesn't even go there. The first place it goes is the bank. It goes to the bank. And then these guys grab their money. Oh, we got paid. The military, the welfare queen, the welfare king, the road builders, the banks, the school, whatever they get. And then they take that money, and where do they put it? Goes into the bank. Okay. Well, what banks do is they lend money. That's how they make money. And they only lend on like 4 or 5 main categories, but they're all more or less determined on things you can't pay cash for, like a car or a house or tuition. Most people don't have the money to just, oh, here's all the money for the house. Or here's all the money for my 4 year of education. Here's all the money for a car. So the bank then relends it into these general asset categories. Right? Not lending you money to go buy a packet of bubble gum or a gallon of milk or a gallon of gas. They're lending it on these tuition, housing, healthcare as well. We got health expenses. That's usually shown up in your credit cards, but we're going to ignore that for now. And not your average person down the street, but corporations will borrow money. If you say the interest rate is 3%, corporations say 3%. Inflation's 2%. We'll borrow as much as we can. And what do they do with it? Well, sometimes they might build another facility. Sometimes they might build another factory. But especially after the housing crisis, when prices were tanking, corporations bought back their shares up to about $2 trillion, I last recall. So the point is that when you print off this money, and it's intended ostensibly to help out the unemployed today in today's economic environment. Yes, these people get that money. They go buy this or that, and this. But no matter where they spend that money, it could be at the grocery store. It could be at their rent. It could be the car shop, gas station, wherever. All that money goes where, boys and girls? The banks. And the banks take that and they pool it, and then they lend it out into these key asset categories. So, surprise, another question many people, why is the housing market up? Why hasn't that tanked? Well, there's also a dual market where the unessential employees were never really in the position to buy a house, and the essential employees are still essential and they're still employed, and interest rates are incredibly low. So they now have the money. Banks like, hey, low interest rates because of all this money that's been printed off by Trump and previously Obama has now hit the market. It's starting to cycle through, and banks like, wow, we got a load of cash. Anybody want this cash? We'll lower the interest rates. So now it's like, I know even a couple people that refinance from 4 and change down to 3 and change. It's financially worth it. So now you have most people, the essential people, essential employees, they didn't lose their jobs. They got lower interest rates. They could go borrow money, and then they flood the housing market with it. That drives up prices. And corporations are probably doing the same thing. I'd have to look at the flows. I'd have to. But again, I'm no longer paid to be an economist. So except for you now, but we're not going to have me go research or anything because I just know. Anyway, so all this money is inevitably probably being borrowed by Wall Street, or not Wall Street, by corporate America, do some corporate buybacks. People, when that market crashed, they went and flooded in the market again. That's why I just went, me included. I'm like, it's off 25%. Hello, let's go. I think it was off 33%, wasn't it? And not even because people are like, well, here's another thing that isn't even corporations buying back their shares. If corporations get a lot of money, but they don't have any obvious investment to invest it in, like a factory or a facility, and they wouldn't, not during an actual recession like we are in now. What they'll do to prevent it from collapsing against inflation, they'll park it in a thing called marketable securities. And marketable securities is a catch-all word for all types of stocks and bonds and money markets and stuff like that. Not all of it is stocks, but some of it is. You know what? Let me take a look here just to show you. Marketable securities, Apple, I think at one time, company holds cash equivalents of 50.5 billion, and also holds, this is of May 2020, and also holds 50 billion in marketable securities. All right. So if corporations are making a profit and they have nowhere else to invest their money, certainly they might buy back their own stock, but they may just park it in the stock market, get some dividends, hopefully some capital gains. So that's an added incentive. But the point is that it is no longer the profits of the underlying stocks in the stock market that is driving stock prices. It's all this money flooding into it. Another way you can look at it is the Zimbabwe stock market. Venezuelan. Sorry, Oscar Perez. You from Venezuela, Oscar? The Venezuelan stock market. Be it Zimbabwe or Venezuela, I'm sure we could go back to the Weimar Republic. I mean, they were just printing off more money because nobody learns. It's just like, we just print off more money because we're college graduates. Wouldn't it be nice if we just printed off more money? And that's our smart people leading the country today. The Venezuela and Zimbabwe, it collapsed. There was no actual economic production. But what did happen is there were companies in these countries. There were assets underlying these companies. And so people would buy stocks, not because these companies were profitable or profits were going to grow by, but because the money's got to go somewhere. And there's probably a third or fourth, I don't know which example or reason I'm on now, as to why the stock market's going up while the economy is going down. Excluding Marxist entities like Venezuela, they just take the assets of companies. Companies are naturally hedged against inflation. So you could say, oh my gosh, inflation is going to go up. Let's say we know inflation will go up 50% next year. Well, Ford Motor Company doesn't worry about, oh my gosh, inflation is going to go up. They'll just sell their cars for 50% more because their factories and machines and their employees and their assets and all the other things that are going to make, those are already kind of more or less bought and paid for, and their labor is going to go up. But also when they produce this car, it's going to be the same car it was last year. Maybe, okay, it's got fizzy widgets at it, but it's the same car. Nothing's dramatically improved. But with 50% inflation, 50% more money flooding the market, that car's value, that car will naturally hedge and adjust for inflation. Now you got to pay 50% more for that car. So corporate profits are a natural hedge against inflation. And ironically, if you do a study, and I had to do this study, when you look over time, what is the best hedge against inflation? I think it's not even silver or gold, but it's not number one, but number two was the S&P 500, because all of our productive resources and factories and material and capital productive investment resources are there. They're what's going to produce the future goods and services we will buy in the future, which would be then at those inflated prices, which will then garner that sales and revenue into the company, boosting its revenue, not adjusted for real terms, but naturally hedging for inflation. So in buying stocks, assuming nothing individually goes wrong with that company, whatever fizzy widgets or doodads they make in the future will be sold at inflated prices. And that inflation is thus hedged for in the profits, which would drive that up. So that's another reason people would go into the stock market, because if you're particularly savvy, if you think there's going to be more inflation, you say, well, we kind of did. We printed off like 33% more money in 6 months because nobody dares suffer. No one suffer. That'd be horrible. You won't, and then this gets back to the bank. You won't see a gallon of milk go up by 50%. But have you seen the stock market and housing prices go up? Not by 50%, but they're up, aren't they? What is, maybe I should really look this up, shouldn't I? Dow Jones Industrial Average. What is it up from year? Let's take a year to date. Oh, was it at 30? Oh, then it dropped down. Okay, yeah, then it dropped down. Yeah, it's just shy of 30. And it dropped down here. Yeah, now we're all the way back up. We've recovered in 6 months with the economy contracting at a third per year. So yeah, there you go. That's it. It's just inflation. If you really want a simplified version, all this money we print off has to go somewhere. It has to go somewhere. And people who have a significant amount of money are probably going to throw it into the market to hedge against inflation. But the key thing is to look where we pool all the money into the banking system. And where does the bank lend it? Well, now it's channeling it to these 5 main asset categories. And that's where you're seeing most of your inflation. I find it so precious how millennial. I got another book, by the way. Yeah, it's called How Not to Become a Millennial. It's a great book. How they all thought, Obama, we're going to vote for Obama. He's going to give us money for student loans and this and that. And he printed off money. He did. He printed off a lot of money. Yay, Obama, free money. Yay. Well, that just inflated the housing market. And so, okay, you got all this money for whatever program it may have been. Now these millennials, they graduate from college and their number one complaint, logically, because it should be, is rent. It's like, well, wait, did you vote for that guy to print off all the money? Okay, the money went somewhere. Where did the banks lend it? Oh, they relent it into the housing market. And when some of the older millennials got in good, they got some good housing prices. I know some millennials, I'm like, dang, that's you did better than me. But for the young, like, oh, you're going to save the world and wave their flags or whatever. Dude, when I bought my first house, the last time I paid rent was $330 for a downtown studio. Now I'm paying $1,300. Now, admittedly, that's 20 years and there's been some inflation. But that is well beyond what the CPI is. And so that money had to go somewhere. We printed off all the money. Everyone got to spend it. Went to the banks. Where did the banks lend it? Housing. Housing went right back up. And a house that was $200,000 in 2009 is what, $500,000-$600,000? Let's just triple it. Let's just say it's 3 times the amount. Well, what do you think rent is now? Oh my gosh, it's 3 times the amount. And now you're all paying rent. Oh, but you got free money back in the aughts, okay? You got free money when you're all watching Adventure Time and SpongeBob SquarePants, right? You got that free money. Free. So there you go. We got any super chats? Ben Jones for $2. Buy yellow red lights. It's too bright. No. Hey, be happy I got a webcam that's higher definition. I got an okay microphone with a blue rubber band. Hey, NonstopDRE in the house for $5. If the U.S. economy stopped printing money until the U.S. paid off all its debt, what would be the effects of this? Would it help or hurt the dollar and the economy? It would send it into shock. People who are dependent on the Trump bucks and welfare and unemployment. they'd riot. You think we'd have riot? No, we'd riot. So, but if we stuck with it and stop printing money to the U.S., paid off all of its debt. To do that, we'd have to implement some taxes or really cut back on spending, or both. What the effects of it be? If they did it, okay, stop printing money. You'd have to have some kind of debt abatement plan. So we'd have to cut government spend. I mean, how long do you want to amortize it out for? Do you want to amortize it over 10 years, 20 years, 30 years? Let's say a quarter century to get rid of the U.S. debt. That'd be aggressive. What are we at? 110% debt GDP. So 1 year amortize. Yeah, we could do it over 25 years. But you have to have a balanced budget amendment. We'd have to we wouldn't have to get rid of it. We'd really have to pare down the welfare state. We'd have to cut it in about a third or a half. Like, yeah, you're just getting half from now on, and too bad. And we'd probably also have to jack up taxes a little bit. Hopefully not pushing the Laffer curve where you'd start to deter production. So you'd have to run surpluses of 25. I'd have to do the math, but it wouldn't be economics as much as it would be sociological deprogramming people from being parasites on the welfare state. Like, no, you don't get this money. Here's your money. Now pay it back in rent. So it'd have to be something like that. Would it help or hurt the dollar? It would help the dollar and the economy in the long run, but people would be pissed. And you basically have to wait until Xers and millennials would either grow up and realize that we can't just print off more money. This is what happens. We price people out of housing, which is kind of important. I don't know if that's an important thing on the leftist agenda. But we'd also have to shame people. Like, no, you're not collecting welfare. You're going to get a job. And there's half the population collects a government check. There's no way they wouldn't have it. This isn't the United States of, the industrial 1890s. This is the 2020. Somebody hurt my feelings because they called me a name or a slur. Oh my gosh, get him fired. I mean, that's the quality and caliber. That's the spine and the tough skin of Americans today. But yeah, it would help the U.S. dollar. The U.S. dollar would soar if we just simply stop printing off money, because all the other economies in the world are doing the same. They're printing off money because that solves problems. The dollar relative to every other currency would actually strengthen a lot if we had some kind of, what's it called? Not amnesty, austerity program where we get the budget balanced and we pay down our debts. The dollar might be strong enough that we could go and buy the shares. We could buy companies or in positions within foreign countries, corporations, their assets. We could buy ad. Japan did this when the yen was very strong. They buy golf courses in Hawaii and California, and they take ownership in different companies. China's kind of doing the same thing now. I mean, there's a pro to it. You're just going to have everybody give up their heroin crack addiction to other people's money, and that's just not what's going to happen. Just leave that there. All right. Sorry, I didn't know we'd all of a sudden get all these super chats here. It's Friday. Don't you guys have dates or something? I don't want to skip any. I skipped some. Did I already get that? 10:08, 10:09. What would happen if the Fed stopped printing money? Money printer go. Inflation would stop. That's prices would stop going up. And then what prices would go up went up because of legitimate reasons, because they became more valuable. The profits or the prospects of that company went up. A neighborhood was going up in value because a lot of people were moving there or whatever. All right. I thought there was more. David, 128 median home sale price hits 312,000 in Minneapolis, St. Paul. Yeah. Even though we burned our property down. Even though all the reasons to come to the Twin Cities are closing or going out of business. People got to live somewhere. It's not like more people were made. It's just we printed off a lot more money. and the money has to go somewhere. Banks channeling into those fields. Okay, then I got Dre's here. All right, Anthony CMA, $5. Should I buy a used car for $1,000 and spend $1,000 repairing it, or just buy multiple crap cars? Well, I don't know what. You got to give me the mileage and everything, Anthony. I mean, is it a good car? How good are you with mechanics? If you got $1,000, you could spend $1,000 repairing it. You got yourself a reasonably reliable car. Cool. You got one reasonably reliable car, but then I'd also get yourself $1,000 piece of junk. So in case that one goes down, you can use that one. And then, if it's $1,000 piece of junk, it gives you time. You can work on other things, check the tires, check the rotors, spark plugs, compression check if you got the tool for it. Oh, there we go. There's Anthony here. Robert Flores for $5. Am I correct in thinking that if you have the cash, investment real estate is superior to securities as you can live on new property? That depends heavily, Rob. Really depends on the property. See, stocks are universal. One share of IBM is the exact same as the other. Houses, you can have two houses right next door to each other, same zip code, same. One is a mess and totally a horrible investment. The other one's good. It all depends. Now, you can invest in real estate without having to invest in an actual physical property. It's called real estate investment trusts. Those are basically mutual funds of real estate. So a lot of people with their investment strategy, like, I'd like to have some exposure to real estate. I like to invest in real estate. So you invest in a real estate investment trust, and that not only allows you to get exposure to real estate, but it's diversified as well. It's not any one piece of property. So like a mutual fund has multiple stocks in it. So no one stock can tank the entire mutual fund. Same thing with the real estate investment trust. But I would not say if you got the right property. Hey, Rob, go read Bachelor Pad Economics. There's a whole chapter there on housing. If you got the right house for you, yeah, then you start saving money on rent. But there's also maintenance repairs and taxes and insurance. Don't worry, it's insured until it's not. Never mind, looked it up in Minneapolis. But securities has got an advantage over real estate because your transaction costs are nowhere near. You got to pay a realtor at 7%. The securities are more liquid. They don't take. You don't have to mow the yard of a share of IBM. You don't have to. I don't know. You don't have to worry about your real estate taxes, your property taxes being jacked up on a mutual fund. So it's rarely is it good for a single dude or dudette to go and buy a house, maybe a condo. It all depends. But if you got a fair amount of money, you may want to consider keeping those in securities until the point in time comes that you are sure about a house. That's why I wrote Reconnaissance here. We'll just do. Geez. This book tells you to travel the United States and how to travel it, to figure out where you want to live. So you're not wasting all this time buying houses, selling, buying, selling. Oh, we're going to move. Oh, we're going to move. I know one couple, they're on their fourth house now, and in 5 years, I'm like, what? Why'd you just rent? But that one will tell you where to live in the United States. So you buy once and you're done. You found your place. Marcelo MJ for $10. What do you do when the girls ask for deeper and you don't have more deeper? Is it good to buy a house now? I don't know about the girl. I guess you're stuck there with the girls. Is it good to buy a house now? All depends where, and not only where, which house. Like everyone was all California, San Francisco. Oh my gosh. And now because everyone's remote working, there are people moving out of San Francisco, out of New York. I don't know why you'd stick around. I don't know why they didn't move sooner with human feces in the streets, but I'm not as intelligent or bright or philosophical as San Franciscans. Are they the butt end of a joke yet? Have the Gen Zers woken up and realized, hey, wait a second. These guys are about as smart and couth as boomers. They don't know anything. Hey, Atham, $2. S Toy Tree Stone. Oh, are you stoned, Atham? Estoy Tree Stone. I am. I don't know. 3 stone, tree stone. Atham, I didn't know he did pot. I don't know if he did. Adriano Ramos. 2 Australian dollars. The difference between the Hittites and the Babylonians. I actually know this. The Hittites were mainly in Asia Minor, in Turkey. The Babylonians were more towards Mesopotamia, the Euphrates and Tigris rivers. And I believe, who preceded who? I think the Hittites preceded the Babylonians. I could be wrong. And the Hittites and the Egyptians fought each other a lot. They both had chariots, and then the Hittites just poof up and disappeared. And they're not terribly sure for what reason. But Gozer was big amongst the Hittites. The Hittites worship Gozer. Does anyone get that one? Anybody? Different movie. Didn't you guys go to Sunday school? Anyone know that one? Yeah, the Hittites, they were pretty badass, and they just poof disappeared. I could be wrong, but I think that's of the many podcasts I listened to put myself to sleep. Joe Peeps, 10 Australian. Hey, Joe, you and Adriano should get together. You're over in Australia. Hey, Cappy, what were your ideas for COVID-safe investments? I see that Buffett and Dalio are loading up on gold. Thematically, I'm looking at 5G technology. So I don't pay attention to the markets anymore. I used to do that. Like, oh, I'm going to get into this thing. I'm going to get into that thing. And I made some money. I lost some money too. I'm a minimalist. I do index investing because I don't have the time to track sectors, let alone individual stocks. I've already taken my position in silver. I already bought my cryptocurrency quite some time ago. I'm happy as heck to see it go up. I'm happy as heck because I think that's going to be the ultimate death knell that ends communism, or not as an end communism, but prevents them from getting anything. I think that's how most people are going to export their wealth to a safer haven if the United States goes communist or just too socialist. 5G, I guess. Yeah, sure, man. I mean, but keep in mind, people who aren't necessarily smarter than you, but their job is to be on these things and they work for investment firms. They're way ahead of you guys on this. The real money made their investments long ago before you guys, before you even knew what 5G was. There are plenty of big investors. The smart money is what it's called. They're already in a pre-IPO. So I don't know. Classic basement. Hey, I know you. $5. Explain inflation to my socialist friends is extremely frustrating. If they are that dumb, I mean, I can understand if you're a little fifth grader and you don't understand it, but if they don't understand that if we just print off more money without increasing the amount of goods we produce, we're going to have more money per number of goods out there, they should not be voting. And they should just shut up too about politics and economics. They just really should shut up. And I don't mean that because I disagree with socialists. Anybody, if you can't explain to me why printing off more money won't lead to economic growth or solve problems and will only lead to inflation, if you don't understand that, you should, one, don't talk to me, let alone about something that you don't know you're talking about. And then two, please don't vote. But I know you need your gimme that's and money printer, go burr. And what's sad is most of you people have college degrees. NonstopDRE for $2. What would happen if the CCP loses power in China? I don't know. I think China has enough cohesion as a culture that stick together, just be a new government. I don't know. I don't think it would be as fractured as under Chiang Kai-shek when the nationalists were over. Not to bore you with pre-World War II Chinese history. Formosa, hey, look, Cappy was educated. Whatever political structure takes over, China would take over. Maybe they be more free market. The pretty free market, especially for a quote unquote communist country. They're really just communist in name. I think they'd still have their industrial base. I think they would still they got 1.4 billion people. The factories are there, so their assets haven't gone away. I think it would be good for China, although I'm having my doubts about democracy now. And please, people, I already had some guy, shows you're an idiot that you didn't know the United States was a republic and not a democracy. And like, Cartman, guys, it's like, yeah, I know. I'm talking generally democracy. We don't say republicany. Is that it? We done with the super chat? No, we're not. Competent Man for $2. Protests in Rochester shut down restaurants. Rochester votes left. I don't care. I don't care. How many were down there? How many? Maybe look it up. What Atham is TNS? But somebody fed Atham some bad pot. Somebody who fed the Mexican the bad pot. Somebody go fetch him. Yeah, Chad, you go. He's your responsibility tonight. You take care of him. Mega Shredder 101 for $5. Would you rather buy stocks, real estate, precious metals, or cryptocurrencies? Right now, well, what's Bitcoin at? See, I don't really. Yeah, 10,000. Oh, it came down from 12. I don't know. Maybe I toss some money into Bitcoin. What are my choices? Stocks, real estate, precious metals, or cryptocurrency? I guess none of them, because I'm still a fundamental investor. I'd wait for another crash. The only one that took a correction was crypto. Bitcoin's down about 20%. So if I had to choose between those, I guess cryptocurrency. Price to rents, I got to look at real estate's very location. Spot stocks, no, I guess in this sort, I'd do crypto, precious metals, real estate via real estate investment trust, but only in something that focuses on low price to rents, and then stocks. I could be proven completely wrong. Crypto could crash and stocks could skyrocket. I've never claimed to know. But I'm still Bitcoin at 10,000. That's a bit steep. I know it could go up to 2, but I already have. It's great to get a position in things early, guys. Just saying. Just letting you know. MK for $10. Cappy's opinion on minimalism versus frugality. I think they're one and the same. I don't know why they're not versus. They're not mutually exclusive of each other. Frugality leads to minimalism, or minimalism following the principles thereof leads to frugality. And by the way, at the end of the month, I have a seminar coming up on minimalism that many of you would probably like to take. If you know nothing about budgeting, savings, and you have hard time spending more than you make. If that's the case, keep an eye up. I'll let you guys know. And yeah, it's through Teachable. You can search me and find it, but it's not open yet. I'm only doing it once a month. So I don't think it's a versus. I think they go hand in hand. You should be both. You should be frugal and a minimalist. The sooner you guys get minimalism in your mind as a practice, as a philosophy, the sooner you're going to save yourself tons of money, spending money on cars that you don't have the money for to impress girls, buying McMansions you don't need, renting fancy places buying crap you don't need. And you'll really quickly find out what's very important in life once you get rid of things and stuff and materialism. And then it's pretty easy to be a minimalist. All right, here we go. The Competent Man. Oh, was it part of the Bronze Age collapse? That's what. Okay, I knew it was abrupt. You know of the Sea People, I bet, too, Competent Man. There's another mystery of ancient history. The Hittites fell 1180 BC, part of the Bronze Age collapse. Okay, I didn't know that. I did not put that together. So, yeah, Babylonia probably was after that, or concurrent with the Hittites. CPT for $5 Canadian wins the boog. We're so far from that, guys. That's not. I used to be a sovereign risk analyst where I'd analyze countries and economies. We are a very stable first world country. I mean, it could happen tomorrow. You don't know. That's the first disclaimer of anything economics or finance or investment. I don't know because I can't predict the future. But there's you want to see strife and anger. Go read the Economist Intelligence Unit on pretty much any African or second or third world country, and you'll find real strife. Goth Rocker 7, Cappy, will it ever be possible for the United States to pay off our debt? I feel it's not possible. No, it is. It is. It's, they'll either monetize it, we'll just print off a bunch of money. Oh, yeah, it's paid off, and we're going to have a big inflation reset. Or if you want to do it old school, And it would be the galvanizing, suffering experience that every American needs, where it's like, no, we're cutting. And it's not even that bad. You know, it'd be like, hey, we're cutting welfare in half. And I have to qualify something. Yes, Robert Reich, I know welfare, the actual TANF program, is a very small percentage. I'm talking all of it. All of it. Social Security, Medicare, Medicaid, any transfer of money from the state to a person who didn't work for it, we got to cut that in half. So there's still somewhat of a, disability. Oh, I have a case of the bipolars and the vapors. Beauregard, fetch me my fainting couch. One guy that got $1,000 scholarship because he had dyslexia. No, that's all done. That's all done. So it's noted, like, is it possible for a 300-pound man to lose, who needs to be like $180? Is it possible for him to lose 120 pounds? Yeah. You're going to have to work at it. You're going to eat less and you're going to work out more. And what we're going to do is we're going to get by with less. I'm sorry. You cut the welfare state in half. Oh yeah. Easy. We could pay it off. Hey, here's the shot, guys. Go look at the federal budget. Go look at the state budget. You'll see, like, wow, look at is that what we're spending on it? Minnesota, I think by state law, we have to spend half our money on education. Well, now with the advent of the internet, we should just say, no, we don't even need an education system run by the state at all. It should be constitutionally changed. And now everyone self-educate themselves on the internet for free. But no, we need to spend at least $500 billion a year on education. I mean, there's so many ways we could save so much money and pay off our debt. And here's another thing. Keep this in mind, guys. The percent that is foreign owned, I forgot what it was. If we just boost, our dollar gets stronger, all right, we can pay off our debts quicker and quicker and quicker. All right. It's good to have, you can play games with the currency. If you get a balanced budget and a stronger currency, all of a sudden the rest of the world starts getting a lot cheaper. But I even recommended early on that if you wanted to do this, I forgot when it was. I recommended, was it Trump? Was it that, like, dude, print off all the money in the world, go buy up all the profitable, or take a 49% stake in all the profitable companies in countries in the world. They'll pay a higher dividend yield than our interest rate. And that's another way to, but don't listen to me. I'm just a financial genius. That's all. Don't listen to me. But I want my gimme that's. $2 from Atham again. Lost trap, eat toss. Chad, are you paying attention to the boy? Are you following? It's your job to watch him tonight. Hey, Napier's in the house, who you can see over at Jack Napier on YouTube. Red Evening is the name of his show with Rob at Rob Says. All right, is that it? Are we done? No, we're not done. One more here. All right, Competent Man for $2. Biden accidentally read teleprompter cues at times. I don't pay attention to pot. Dude, I smoked a cigar today. Take a look at my Twitter. Follow me on the Twitter. And I just looked at a nice lake with a sunset. I'm going to play some video games tonight. I'm just going to chill out and relax. I don't care. Life's too short. All right, there you go. So there you go. Anyway, if you guys are interested more about economics, you guys want to get this book, check it out. Bachelor Pad Economics. It's kind of stuff like that. Probably better written than what I just rambled on here. And yeah, if you guys got questions on economics, I know not everyone is a veteran. I think Kat is a new person and maybe you haven't watched the entire show. But yeah, if you're new to the channel and you want some basic one-on-one questions on economics, guys, yeah, absolutely send them in, because I think that helps a lot of people, especially the newbies. So, all right, we'll see you guys later. Toodles.